Let me ask you something. If someone walked up to you on the street and said, "Give me $200,000 and I promise I'll send you a check every month for the rest of your life," what's the first thing you'd want to know? You'd want to know, who are you? And can I trust you to actually keep that promise? That's exactly the question insurance company ratings are designed to answer. And yet, most people signing annuity contracts have never looked up a single rating. Some have never even heard of AM Best. And unfortunately, some agents never bring it up. Today, we're going to change that. By the end of this video, you'll know exactly how to read an insurance company rating, what it really means for your retirement money, and how to look one up yourself in about 60 seconds. Let's get into it. When you put money into a fixed indexed annuity, you're not making an investment. You're entering into a long-term contract with an insurance company. And that distinction matters a lot. With a bank account or a CD, your money is protected up to $250,000 by the FDIC. That's a federal guarantee backed by the United States government. With an annuity, there is no FDIC. Your money is backed by the financial strength of the insurance company you signed with. Now, every state does have what's called a guarantee association. Think of it like an FDIC equivalent for insurance companies. If a carrier fails, the Guarantee Association can step in. But coverage limits vary by state, and the process is not instant, it's not seamless, and is not a reason to be careless about which company you choose. Here's the bottom line. When you buy an annuity designed to generate income for 20 or 30 years, the company behind that contract needs to still be standing 20 or 30 years from now. The financial strength of your carrier is not a footnote. It's part of your retirement plan. That's why ratings exist, and that's why you need to understand them. There are four major agencies that rate insurance companies. You've probably heard of at least a few of them. There's Moody's and Standard & Poor's, which most people call S&P, and Fitch. Those three are well known in the financial world. They rate corporations, governments, and bonds, a wide range of financial entities. And then there's AM Best. AM Best is the one I want you to remember. Here's why. AM Best has been rating insurance companies since 1899. That's not a typo. They've been doing this for over 125 years. And unlike Moody's or S&P, AM Best was built specifically and exclusively to evaluate insurance companies. That's all they do. They're not distracted by rating tech companies or sovereign debt. Their entire focus is on one question. Is this insurance company financially strong enough to keep its promises to policyholders? That makes AM Best the gold standard in the annuity world. When an agent, a carrier, or a financial publication talks about insurance company ratings, AM Best is almost always the benchmark they're using. The other agencies are not irrelevant, and we'll touch on how to use them as a second opinion, but AM Best is where you start. Now let's talk about what the ratings actually look like, because the scale is straightforward once you see it laid out. AM Best uses a letter grade system, very similar to what you saw in school. It runs from A++ at the very top all the way down to D at the bottom. Here's what each tier means in plain English. A++ and A+, this is what AM Best calls superior. These are the strongest carriers in the entire insurance industry. Very few companies achieve this level, and even fewer maintain it over decades. If you see A++ or A+, you're looking at an elite carrier. A and A-, this is excellent. This is a sweet spot where you'll find the majority of reputable annuity carriers. A and A- rated companies have demonstrated strong balance sheets and solid operating performance over time. For most clients, this is a target range. B++ and B+. This is good. These carriers are not in bad shape, but the fact that they're not in the A range is worth understanding. If an agent is recommending a B++ carrier, it's a fair question to ask why and what has kept them out of the A tier. B and below. For retirement money, this is generally where I draw a hard line. Fair to poor ratings indicate elevated risk. And when we're talking about income you need to last the rest of your life, elevated risk is not acceptable. Now, here's something most people don't know about AM Best ratings, and it matters just as much as the letter grade itself. Every rating comes with an outlook, and the outlook is either stable, positive, or negative. A stable outlook means the company is on solid footing with no expected change. A positive outlook means AM Best sees the company trending stronger. A negative outlook, even on an A- rated company, is a yellow flag. It means something is shifting and it's worth paying attention to. So don't just look at the letter, look at the full picture, the letter grade and the outlook together. Let's get a little more specific about what AM Best is actually evaluating, because this helps you understand what the rating is and what it's not. AM Best primarily looks at two things. The first is balance sheet strength. This means, does the company have enough reserves, enough money set aside to pay every future claim and honor every income obligation it's made? For an annuity company, this is enormous. They are promising to send you a check every month for potentially decades. AM Best wants to know that the money will be there when it's time to write that check. The second is operating performance. This means, is the company well managed? Is it consistently profitable? Does it have a sustainable business model over the long term? A company that looks fine today but is hemorrhaging money year after year is not a safe bet for your retirement. Now, here's something critically important, and I want you to hear this clearly. A strong AM Best rating tells you the company can pay. It does not tell you that every annuity they sell is the right fit for your situation. A carrier can have an A+ rating and still offer an annuity with weak cap rates, unfavorable income rider terms, or surrender charges that don't align with your timeline. The rating is the foundation. It tells you the company is trustworthy, but what you build on that foundation, which specific product, which rider, which income strategy, that's where working with a knowledgeable agent makes all the difference. I want you to be able to do this on your own, so let me walk you through it quickly. Go to ambest.com. You can do a basic carrier rating lookup at no cost. You don't need to create an account or pay for anything to see a company's rating and outlook. When you search, look up the name of the insurance company, not the name of the annuity product. Annuity products often have marketing names that sound nothing like the parent company. You want the carrier name itself. Once you find the rating, note the letter grade and the outlook. Write it down. And then if you want a second opinion, head over to S&P's website or Moody's and look up the same company there. Seeing consistent, strong ratings across multiple agencies gives you additional confidence. And here's something I tell every client. Before you sign anything, ask your agent to show you the current AM Best rating for the carrier they're recommending. A trustworthy agent should be able to pull that up in 60 seconds without hesitation. If they fumble, change the subject, or can't answer the question, that tells you something. Alright, let's bring this all together. When you see an insurance company rating, here's what you now know. AM Best is the rating agency that matters most for annuity buyers. They've been evaluating insurance companies exclusively since 1899. The letter grade tells you about financial strength. Look for A minus or better. The outlook tells you about trajectory. Look for stable or positive. And the rating tells you the company can pay, not that any specific product is the right fit for your retirement. Ratings are one critical piece of a complete retirement income strategy. They tell you the floor is solid, but you still need to make sure the house you're building on that floor is the right design for your life. If you'd like to learn more, take a look at the free booklet called Retire Smart. It's linked in the page on the description box. And if you found this helpful, please hit the like button, subscribe so you don't miss future videos, and share this with someone you know who's getting close to retirement. They deserve to understand this too. I'm Shonda Prescott, and this is Retirement Security Simplified, where we specialize in turning confusion into confidence, one conversation at a time.